Hey, this is John Allison. I'm the Chief Marketing Officer here at CEDO in the Atlanta metro area. And we're excited to continue on our journey speaking with people who are very impactful in the community banking and credit union space. And I'm thrilled to have Juliet D'Ambrosio with us of Adrenaline, who is an agency within Atlanta that really focuses on brand experience. And what I'm going to do, Juliet, if you'll indulge me, is I have a few prompts that give you a bit of an introduction and a bio. So
Sure.
I'm going to read through those so I don't make a mistake. And then we'll have an opportunity to set up what we're going to talk about. Probably no more 3 or 4 hours. We'll have you out of here and we'll have you on your way. So Juliet is the Chief Experience Officer at Adrenaline, and you lead the brand experience strategy for Adrenaline and all of its clients. I love this. You specialize in brand differentiation and business performance. You focus, and I love this too, empathy-led and research-driven branding. And you've done some pretty notable work. I see you worked with Coca-Cola, Virginia, Samsung, Visa, S&P Global, International Olympic Committee. I don't know, maybe you've done some work with Santa Claus. I don't know who you've worked for entirely, but you've had some pretty significant folks you've worked with. And you are, in addition to everything you do for Adrenaline, but in concert with that, you're also on the responsibilities for editorial strategy, and you're a co-host of Believe in Banking podcast, which I had a chance to check out, which is great. And in our links that we'll share when we publish this, we'll put all that good information out there for people to take advantage of. You're a recognized thought leader in the financial branding space, and you carry a unique perspective on branding, and it's defined as a brand experience equals brand success. And branding helps financial institutions stand out and drive customer choice. And you believe in the ability of emotional connections and trust that are created through brand. You're based in Atlanta, and perhaps one of the most notable aspects of your bio, you are a wife and mother of 6 children. How do you do it?
How does
Welcome, Juliet.
Really? Thank you. Thank you.
Did we hit all the high points? Is there something else you'd like?
Great intro. Yeah, great intro. And I loved that you called out our podcast, because I think so much of what I can encapsulate my entire bio and really the relevance of brand experience and branding and my background and purpose and the community banking space, whether through banks or credit unions, through the idea of belief in banking, which is the idea that community financial institutions are a lifeblood. And without them, our communities, the health of our communities, of our small businesses, of the people that live there are lost. We need them. Banking is considered an essential service for a reason. And because I believe that so strongly, that's what I'm so happy to spend my career focused on now, which is bringing that idea of purpose and helping to elevate brands of community financial institutions so that they can do more of what they do for more people even better.
I've long said that, when people would ask me what I do, you could do things out of profession or passion. And those are not always symbiotic, but I hear in you that your profession really is your passion, and you have a strong conviction in that. And it leads me to setting the context for what I think we could chat about. Literally, we're hopefully not keep you more than 30 minutes, and the listeners out there, we're not going to keep you going for 2 hours. But I'd like to make a context-setting statement and test it with your experience, what you're seeing today, and see if you agree or challenge it. And from there, I have just a few questions I thought we could talk about brand experience, about customers' decisions as it relates to the brand, and a few other items. But here's the statement. Banks and credit unions are at a crossroads. Traditional brand strategies are no longer enough to drive growth. What do you say to that?
I say yes, they are at a crossroads, and it's the industry context. We have to put that statement within context of an overall long-term trend of consolidation. So in the US, we have give or take 9,000 financial institutions. Canada has 6 banks to sort of put that into perspective. And they do have their version of credit unions, but only about 200 of them. So we're looking at 206 versus 9,000. So as the industry continues to consolidate in order to achieve scale, in order to just to survive, the idea of brand strategy that has served as doing pretty well for these financial institutions for decades has shifted. And the biggest shift we've really seen is since COVID, actually, where brand strategy around a lot of the conversation for financial institutions was around just becoming more modern, being a little bit more human, a little bit more accessible. So going from a very almost a corporate or buttoned up feel in their brand to one that was a little bit more open. Now what we're seeing for brand strategy for all of these community financial institutions that need to grow is the absolute requirement to differentiate. It is no longer enough to look like the bank or the credit union down the street, or more importantly, to tell the story of the bank or the credit union down the street. It is about having a brand that is focused on a single defining purpose, have that purpose be expressed through every touch point, through both the design of the service and sales to the design of the brand, the name of the brand, the feel, the look and feel, the vibe of the experience within the branches, and even what they stand for in the community. So we see a shift towards becoming more purpose-driven to match the needs of how consumer expectations have changed since COVID, but also shifting to become more differentiated. The great news is that the data and analytics that we have has kept pace with the need for that level of change. And so by tapping into some of that data and what we're able to understand at a very, very sort of at macro levels, but a micro level also, can help lead community financial institution brands towards strategies that do help them differentiate. It's hard if you have a whole industry that you're all sell checking account and a loan and CDs, and maybe there are slight differences in rates or prices or even a philosophy of service, but there is something that you do, that your brand does, that's different than everyone else on the planet, and it is the job of brand strategy to unearth that and then to articulate it in a way that it becomes a driving purpose forward that helps guide decision making.
That's excellent. And it kind of leads into one of the main questions to continue our discussion. You talk about the reinvention post-COVID of the financial institution's brand experience. It puts me in mind, and I hope I don't get myself in trouble with anyone saying this, but it reminds me of a bank back in the 2000s that made an attempt at a brand experience that was a differentiator, and that was Washington Mutual. The polo shirts, we meet you out at a bistro-style high-top table. But that bank failed, and there are probably a myriad of reasons. But, it underscores, how the brand experience also has to drive the business performance. It's not enough to have an aesthetic or a vibe, right, but there has to be some serious and vetted strategy that can scale. And as the novelty, anything maybe you'll agree with me, an attempt at innovation could, at the face value, just feel novel for a while. But what's substantive, that is what creates longevity. And so when you talk about the brand experience driving business performance, why does brand experience and not just brand play a bigger role in the banking success?
Yeah, the brand experience is first of all, it's a great question. Second of all, brand experience is inclusive of every way that the brand comes to life and that the business meets the customer or the member, in the case of credit unions. And so that experience, when it is matched to the needs of the customer, either through acquisition or through cross-sell, so acquiring new customers or members, or cross-selling and deepening relationships or wallet share with those customers or members that you do have. That's how it drives business performance. And so a great example of that is in creating a brand experience that is advisory versus transactional. So having people come in the way they want to use community financial institutions is just different than it was. You can do everything you need transactionally. I'm holding up my phone right now, just with your fingertips. So in this environment, what do banks exist for? Credit unions exist for. And what they exist for is because when people want to make a big decision in their lives or need to understand the implications of what happens when they have some money or they're planning for the future. They want to buy a house or a car. They want to save for a kid's college. They need to put their, get their parents some health care, whatever the case may be. They want to look somebody in the eye and they want to know that that person knows them, knows their situation, their personal situation, and that is all part of the consideration. The way that brand experience can support that advisory potential of that relationship building is through creating environments that are intentionally designed to support those kind of conversations. So that can be a brand, a logo, a name, whatever that is, that's welcoming, that's friendly, that has the idea of mentorship or expertise sort of communicated and expressed throughout it. It can also look like branch environments that are designed to put people at ease, to host them, to engage them, to create areas for conversation versus transaction, to take that idea of just branches of the past were built around teller lines, essentially. They were built around a teller wall and lines to create more conversational zones. Brand experience also supports business performance by helping to shape and socialize a culture among the staff of a bank or a credit union. So that means if our brand is about creating these more advisory human relationships, how do we greet people? What does that look like in terms of questions that we want to ask? How do we treat someone incoming who we've not met before, who is a prospect learning about us? So creating that kind of culture that will support acquiring more, cross-selling more, and ultimately leading to greater brand or greater business performance. And it's not just to sort of take our word for it. Yeah, refresh your brand and business will come. Actually, it doesn't work like that. It's not a build it and they will come. It is a build it, and by it, a refreshed, relevant brand experience. And it is supported every single day with culture, with the kind of marketing investment that you need to continue spreading that word, with community involvement that raises your profile, and with a consistent sort of internal look back at purpose and how that purpose leads to your own R&D, et cetera. So it becomes a little bit of a virtuous cycle that you position, design, and deploy brand experiences that help drive that kind of growth. And then you repeat, you keep going back to make sure that what you're offering is relevant in terms of brand experience and on them.
I like the fact that you use the word virtue, because it seems to me everything that you're articulating, we could use that as a syllabus for here are the boxes you have to check. But if it's not driven by purpose or an inherent sense of there has to be a virtuous aspect to it, I think, to make it sustainable. And I think that's the gap often that people, when they get caught up talking about brand, whether it's in the financial services or other business units. So really coming to grips with that. And there's so many brands that I admire because I think they've done an amazing job of speaking their purpose and not just portraying a caricature in the form of a lizard or something like that. There's something beyond that, and I won't mention that brand, but I think everyone knows what we're talking about. You've talked about, you've given us, you've painted a picture about the brand experience, but you've done something too. You haven't just left that to the realm of intuition or speculation. I believe you guys have anchored that in latest research and how consumers choose a financial institution. I even heard you say on your podcast, and one of the recent ones I just listened to, where, and you have to correct me if I get this wrong, but the aspect of the millennial generation wanting to walk into a brick and mortar would be counterintuitive to everyone. Everyone says, oh, you just need the app. Here's your app. Do this. Yep. You don't have to interact with people. You can go to a neobank online or whatever. But talk to us a little bit about that research and how consumers, whether it's a millennial or whatever demographic, choose how they choose the financial institution based on that aspect.
Yeah, it's so interesting because the data is really myth busting. It busts all the myths that we might perceive around how consumers want to bank today. And millennials are an interesting group, but what's really interesting. Millennials are kind of old now. They are like backed up. We have I say as a proud Gen Xer that Gen Z, and we actually just published a report last year called Gen Z and the Future of Finance, which dove deep into the levers of behavior. How do generations want to bank differently? When I say it's myth busting, it is that one, the myth would be that younger people don't want to use the branch, just like you said, just they'll get a neobank, they will transact online, they'll get all their financial advice from TikTok and then move on. And what's actually happening, and this is proven over several very credible Ernst & Young, McKinsey, the big guys studies, that millennials actually use the branch 3 times more than boomers do. That means on average, every month they are using the branch, and it is inclusive of the drive up channel as well as walking into the branch lobby, but 3 times more than boomers. Gen Z is right behind them too.
Wow.
And which is even sort of more myth busting when we think about it. What's important when we sort of dig into the factors that are important to these generations, especially around choice? How do they choose a financial institution? The number one factor is trust, actually. They want to have trust in an organization, in the financial institution, that this place has my best interest in mind, that they are doing something good for me. I can believe in them. I can rely on them. And I know that they are here doing good, maybe a broader sense of doing good. When we look at the sort of global research, when we take a look back at the macro trends, there's been a lot of uncertainty in the world. We can even start the conversation at COVID, but we could go back to when millennials were coming of age in 2008 in the Great Recession. There was so much uncertainty that now that idea of trust has been eroded in a lot of our institutions. Government has gone down. Media has gone down. Technology even has gone down. The one place where trust has continued to rise is in our companies, our corporate institutions, where people now look to those to do what they say and to do what is right. And so community financial institutions, just like all corporations, they're really at a critical threshold. How do we take this trust that consumers now look at us as we are the paragon of being these trusted institutions, and how do we live up to that? Financial institutions are right up there with being highly trusted. And there's community financial institutions have a special role to play in that, as they're thinking about how they build on that idea of trust in a way that consumers will help choose them, especially in the wake of, it was just last year when we saw Silicon Valley Bank, First Republic Bank, we saw sort of some trust eroded even more around the volatility of the big banks. Community financial institutions have the ability, and John, you know this really well, to stand up and say, that's not us. You can rely on us. We have served this community for how many years, and we will continue to do that. We know that Gen Z, Gen Y, which are millennials, want to have that trust in the organizations that they choose and are more driven than older generations by the idea of brand purpose. Boomers actually prize convenience. They want to know, which is funny because I think a lot of boomers, we would assume they're retiring. They have all the time in the world to go hang out at bank branch, but they're actually driven by the idea of convenience. How does this sort of work around my life? Meaning this as the brand experience or the banking experience, really, for their financial institution. So there's all sorts of interesting dynamics at play. And because of that, there are all sorts of opportunities for community FIs to really dig deep and double down on their unique inherent strengths.
Man, you've blown through many of the questions I had. You've bundled them all in the commentary, which is fantastic. And the fulcrum to much of what you're saying is this idea of trust, this implicit ability for a depositor or a client to have confidence in the institution, not just the security of funds, but in the experience. I know over time, the aggregate of my experience in that bank will breed trust. So, I'm thinking about how do banks, as individual entities that, they're in a particular commonality of industry, how does a bank and credit union really use that brand storytelling to influence its customer behavior? Not just what they're hearing, but we all dream of brands that have purpose, and then an effect and a change or a behavioral change, or society responds in a very measurable way. How do banks and credit unions see that success in their story and share that out to the public?
Yeah, that's a great question. And the number one answer to affecting change is that someone's got to know who you are. You got to stand out first before a consumer's behavior will shift in any way. What we see working with our clients, and this is true across the board, is that their brand awareness typically definitely lags the big banks, which we would expect, but lags even where they think their brand awareness might be. And so to affect change, you have to get on the radar. And getting on the radar involves standing out. And standing out involves differentiation. And differentiation involves sort of digging down, and we're going full circle back to where we first started, digging down to understand what your institution has to offer that no other community FI on the planet could offer. And it comes from your DNA, from your leadership, from your vision, from your region, from your unique way that you serve and act, what you believe, your shared ideals, all of that are brought to the fore. So the number one thing it has to do is stand out. The number two way to influence behavior and change is that you have to connect with the right people, with the right message at the right time. And that is where data comes into play in a big way. The idea that we can have smarter, deeper ways to track consumer behavior, but also to follow up with them, to be where your consumers are and where their message might resonate in the way that your marketing strategy is developed, in the way that your community engagement strategy is developed. And those two go hand in hand. So we're looking at sort of your paid marketing investment, your organic marketing investment, your community engagement investment, your philanthropic point of view, and how you are supporting the causes that matter most to your consumers. So all of that, when you put them together, one, you stand out, two, you connect, and those are the proven ways that you have to influence behavior. And the beautiful thing about the sort of our ability to observe, monitor behavior in real time, especially through digital channels, means that if something's not working, you can change it. You don't have, and I'm talking about with a campaign, you can switch it up a little bit. You can take some creative risks with your storytelling and see what works. And if not, you can shift and adjust accordingly. In some ways, financial marketers have never been in a better position. Very complicated. It's a complicated environment out there, but in order to connect and in a meaningful way that you can track business performance, it's never been better.
It's very interesting. I mean, we're looking at the clock. I wish we had literally another hour, because there's so many things that we could share that I do believe that our local banking leaders and credit union leaders would find valuable. I just want one little comment as you were talking and detailing the idea of brand story and differentiation, whatever. It seems to me that you can have hard data, but there's a mandate that I think every leader in these spaces has to embrace, and that is we have to know what it means to truly listen. We can read data, we can look at analytics, but when we have the opportunity to listen to the client, there's an emoji I keep in my head. There's two columns of water. In the left pane of this emoji, there's a brick, and the column of water is splashing on the brick and bouncing off, and it says listening to respond. And then the next pane is that column of water hitting a sponge, and that's listening to understand. And I think that becomes for me, as we work in CETO, I really want to understand our client's voice, their pain points. You said something earlier. I just don't want to position CETO as a transactional entity, but an advisory, that we come alongside, whether we sell anything at all. We engender trust. We want to show that we have that level of capacity to listen, understand your pain points, and then possibly we have a resource that we could offer that could help you on your journey and foster your business goals and purpose. And I have like a litany of questions. I'm just like dying to, which one's the most important? Again, respecting your time, but this might be an interesting one in a segue as we look to the closing minutes. But, we're talking about the current situation of banks. I'm going to sneak a question in here. So of this 9,000 number that we have in the U.S., we know there are banking institutions, both credit unions and banks, and there's a percentage break between banks and credit unions among that. When we talk about banks and credit unions, it might be fair to say in the community size, we're maybe looking at 4,000, maybe 5,000 banks. It's not encompassing all 9,000 institutions that we're describing there. And a lot of these community banks have been here for so long. On their journey, how often, some people, these banks could be decades old and they've just kind of perpetuated the work they've done. How critical is it to pause and go back and re-examine the origins? Maybe that's a narrative that is still current today, or it needs to be adjusted, as you say. What would you say to that?
Yeah, we do. It's a great question, because so much about branding, brand refresh, brand change is not actually about changing a story, but it's about understanding where you are and how that story is heard. Going back to your whole comment about listening, how do your prospects, community, how do your customers, your members, your employees hear that story today? Because their ears might change a little bit based on the world that we live in. We recommend an audit, a research-based audit of a brand about every 5 to 7 years. That changed after COVID, just because there was such a massive sort of upheaval in consumer expectation that really anything before about the 2022, 2023 mark is no longer relevant. There's just been too many shifts. But about every 5 to 7 years, that looks like market research that goes into, and sometimes customer research that goes in and says, all right, this is who we are. This is our brand story. How are we perceived by the people that matter most to our growth, which are our customers and our prospects in our market? Does this story resonate? What are associations do people might have with our brand, our experience? What are some competitors that we should be aware of, and how do all these audiences perceive those competitors, and where are some opportunities and gaps that we have that people need that we could fulfill with our brand and our story, and that might sort of focus us towards making a shift in how we go to market with our story, whether that's around brand change or just a shift around the storytelling or the marketing activations, say. So a research-driven approach, it's just a good best practice. And I'm talking right now, addressing community financial institutions. If you don't have one, it's time to start benchmarking. And it's such a great way to see. And when we talk about how brand impacts business performance, this is a beautiful way to be able to trace that in a meaningful way, to get some research just to understand where you are and where the potential is for you to go.
I share sometimes with some of my younger guys in the office here, I talked about, asked them if they knew what a plumb line was.
Yeah.
And there was like a little turn of the head. It's maybe a little bit more in the carpentry world or whatever, but the idea that you have a weighted plumb that you attach a line to, and it creates this empirical truth that tells if something is vertically centered or level or whatever. I hear what you're saying is that we do have to pause and make sure that we gather factual insight and information around our markets, what's going on, and it takes some intentionality and a strategic cadence to make sure that content is relevant. We have a couple minutes. Actually, we're getting close to being over. If not, I'm going to just wrap up with 2 questions. And I've left so many questions on the table because you've ticked some of the questions off, as I said, as we move through here. But in the next few moments, what do you see as the next big shift and how financial institutions approach branding. Do you see anything on the horizon? Is the advent of certain types of technology that affect the brand narrative? Is it an emerging elevation of a philosophy or a thought leadership thing that you're seeing? How would you respond to that?
Yeah, that's so interesting. No one's ever asked me that, and I've not been tasked with answering it. But I think the easy answer would be AI, because it's 2025.
Sure.
If I didn't say AI, then would it even really
You wouldn't be cool,
AI?
Julia.
Yeah, it's right. But AI it's a tool. It is not the answer to that question. I think the shift for financial brands, especially as we see sort of Gen Z become more and more of the financial players that are rising to the top, I think it's going to be the idea of truth telling, and those brands that are that embrace transparency, those brands that signal, that shows sort of take an inside out approach to how they tell their story, are going to be the ones that build the deepest kind of trust, and therefore are the ones that will win in the end. I think that, as you know, if we go back to some of those macro conversations around what consumers want and need, and in a very rapidly shifting, ultra dynamic world where headlines are different every single day about where the world is, that idea of trust, which comes from knowing that what I see is what I get, and therefore those brands that embrace that, whatever that looks or feels like. I don't know what that looks or feels like yet, but I think those might be the brands that win.
I think you've answered the final question I was going to ask you. If you could give one piece of advice to the financial leaders throughout the U.S. today looking to elevate their brand, what would it be? I might say what you just said is pretty critical. Is there anything else that comes to mind? Is that, hey, folks, we believe in your work so deeply, and here's something I'd love to leave you with?
Yeah, I would say that for financial leaders to understand that brand drives business performance, and it is not ancillary to, it is not a nice to have in this environment, but brand is something that is absolutely essential to, fundamental to your organization's business performance, its culture from the inside out. And there are all the reasons in the world to look at brand as one of the sort of key levers of helping to drive business performance. So that's it. I would like financial leaders to understand that just because you're a banker doesn't mean that brand doesn't matter, and that it is one of the biggest business risks that goes overlooked over time, just because it can be an unutilized, under-optimized tool in helping your business performance.
Great stuff, Juliet. I can't thank you enough for pausing out of your busy day. I know you got a lot going on, and for sharing your incredible insights. I just would like to give you a quick minute to tell us, where can people learn more about Adrenaline and your work? Where can we find that? And we mentioned your podcast, and we'll put some links in when we share this, but where do we find you?
Sure. Well, best place to find us is at adrenalinex.com. And X stands for experience. So adrenalinex.com, where we publish a lot of the data or the insights that I sort of rolled off here, as well as look at our work, and Believe in Banking, which is our baby, just in that we created a site. Really, it is a podcast, but it is also a site where we publish content around community financial institutions and the trends that matter most to them, that really has nothing to do with Adrenaline's work. It has to do with the ideas that are important for those leaders. So please come and reach out. You can find me on LinkedIn to Juliet D'Ambrosio at Adrenaline, and I'd love to hear from you.
Oh, that's great. Again, we're thrilled that you took time out of your day. I'm personally excited from Cito's perspective that we had a chance to circle back around with you and your agency, who really helped us our brand refresh and gave us our logo that we have and proudly brand ourselves as much as possible. Cito, like Adrenaline, I say this to those who are listening, who are financial leaders, that there are so many people cheering your work on and believe very, very deeply in the purpose of community banking and credit union institutions. And we believe not just in the technology that you bring, but the work and effort you put into your brick and mortar experiences. So we're thankful. Juliet, thank you again. And we hope you'll come back and we can get to the other 400 questions I've left on the table. So thank you again so much.
Thanks, John. Thanks for having me. I loved it.